Hello everybody, my name is Thor Young. I'm a moderator with Bear Bull Traders, and today I'm going to be continuing our VPA series talking about pivots and ranges. There are many things to understand about the greater market: profit taking, accumulation, distribution, transition, all these different phases, and all of them happen around pivots or within ranges. Now, what exactly is a pivot? A pivot is generically an area of high volume that comes into a specific level and then the price reverses. As the price reverses, that top level will set your initial pivot. As the stock price comes back down to a lower level, you will notice a slight increase in volume down there, and then the price action will start to move back up. This will set your range and allow you to look at these ranges and figure out exactly what the price is doing. As the volume starts to come in, you can start to determine if the volume is accumulating or distributing within this range, and then you can play the move or the transition into the next range. So I said I was going to be doing something a little bit different today with this, and what I've done is I've actually loaded up CCL, which is a trade that I took back a few days ago on the 28th of August, and I have a screenshot for that for you as well so that you can see what my overall result was on my actual live trade, and I'll pull that up for you guys. But mainly what I want to show you is how I went through this trade and what I was looking at, and as you're doing it, I'll show you where those pivot points are. Now, if you come into here innately on CCL, let me go ahead and pop my 1 minute chart out. Now, as you're looking at CCL, some major things can already start to kind of pop out at you. Now, when you're using VPA and looking for pivots and such, a lot of this doesn't really work as well until you get a little bit into the market. So a lot of you are asking for patterns and strategies and things like that that you can use later in the day. This is going to go more in that direction. Now, of course, you can use pre-market pivots while you're trading the open, and those can be very effective. But for VPA and for these things to work at their best, it really helps to have a little bit of extra data. So the trade that I took on CCL didn't happen till the better part of 11 o'clock by the time I recognized what I wanted to do with the stock. So first off, look at CCL here, and you can see CCL came down here and it bounced off of this previous daily level, which also happened to be near pre-market low. Look at this previous daily here also that it wicked to in the open. So we can already tell just by looking at CCL for a second that the stock does seem to be respecting its ranges pretty well. Here we have a previous daily level, and here we have a previous daily level to the penny, hitting both of those. Those are the kind of things we like to look for when we're looking for a well-managed stock that's going to play well. Seeing these crisp and clean adherence to these levels certainly is exciting when you can see that. So notice we had a lot of indecision in the open. Quite a few shares came through in the first minute, and then CCL needed to sell off a little bit. And then we had a little bit of volume here on this hammer, and then we pushed up, and then we ignited and accelerated all the way up into the top of this range. So our first pivot that we really set is right up here at the top of this range, and I'll mark it right here so you guys can see it really nice and clean. So that's going to be our first pivot, and I went ahead and drew a line here at 1705 just to get a little ahead of things. Now, this is the first real pivot because of the amount of volume we get here. Now, we did get some volume here, and notice when that happened, we did get a pullback to this previous daily level before testing up. So that certainly did act as a pivot as well. And these will end up going longer over time, but each one of these should be adhered to. Whenever you see a larger amount of volume or a volume change at a level, that should step out to you as something, as an anomaly or something that you should be looking towards. So as we're looking here and we're getting into CCL, let me get my little epic out of the way, you can notice as we're coming back down towards this level here that's marked, which is 1660, right? We noticed in pre-market this adhered really well. We couldn't close any bodies above that. We actually tested it here when we broke up. So 1660 apparently has started to become quite the support. Anytime you're seeing what we like to call the ceiling become the floor, these are those critical areas that you can be looking at. What did it look? This was a very heavy resistance before, yet now we're wicking off of it, and it's acting as a very heavy support. These are the kind of things we're really going to be looking for. So as you can see, we come down here, we test it again to the downside, but blow off of it. Every time we come down to it, we throw volume. So this is what I'm talking about when you're looking for where your ranges are, your levels for your pivots. We have high volume up here, so this is going to be the start, and then we come down here, and we don't mark our bottom of our pivot till right here, right? Why do we mark this as a pivot? Because we have volume. right? Before that on the sell down, we never got volume. Now, we can't trade off of that yet. We're just starting to get our data and starting to really put together the pieces of the puzzle here. But basically, we can already see that we have this range from about 1660 all the way up to 1705, and that's certainly a range that has enough room for us to play. So basically, what I'm waiting for now that I see this pivot is I want to see if this pivot itself is going to hold. And in order for it to hold, I need to see some tests of it. And also, I want to see the volume decline as we start to push into it. The one thing you don't want to see is a large increase in volume at the bottom of your range or at the bottom of your pivot. Quite likely could mean it's about to fail. So you notice we have multiple tests here to the downside. Every time we come down for a downside test, this one initiates the pivot, so we get volume. This time we come down, not so much. This time we come down, this time we come down. Every time we're just on this slowly declining volume. And you can see here over time, we've just slowly declined in volume. So that's exactly what I'm looking for, because what it shows is a lack of enthusiasm or a lack of excitement for the sell-off, right? So let's go ahead, and what I'm going to go ahead and do is I'm going to go ahead and minimize this, and then let's get into the replay. So first, I'm going to actually just start it off at 8 times mode, and what we're doing is we're watching here on this. And now what I'm looking for most specifically is I'm looking for some kind of a spike in volume, something to show me that we're going to go up, and then it's going to break up and hopefully come back up above 1670 somewhere. And when it gets up there, I'd like to see it retest that area and show me something's going on. Maybe even get into a 3-bar play. Now, 3-bar plays, just to get into that real quickly, is when you have a high breakup on volume. That's bar 1. Your second volume should be less than half the size of that candle, show a little indecision, be on a little bit lighter volume, and then your third candle should have a breakup to the top side. Any entry in there is pretty valid and can be used in quite easily. So what we want to do is we're going to keep an eye on this, because remember, you can't make this trade happen. You got to wait for it, and you got to wait for the right signal, and it's volume. Right now we have no volume down here in the bottom, nothing signaling a move or excitement. Okay, so here we go. We're breaking back up above the range here, and now you will start to notice time and sales is ticking through more, and we are getting a little bit more volume to come in here. All right, notice that, a little bit of spike. All right, now we're pushing up again. More volume coming in. Okay, so this looks like this is going to be our moment. So this is the setup of the 3-bar candle. So I'm going to pause right here for a second. We had our breakup here, and we had a little bit more than average volume come in here. You can see how we broke the average volume line. And then we had our next candle that's indecision, and more volume came in here. But notice where we are, right above that previous daily level, right above pre-market high. Our risk here is very, very good, because basically you're coming in from the bottom of this range. So if you go long here, all you need to risk is the previous day's close, or this previous daily level. If it breaks through 1668 and gets out of here, then you can bail. Now, if you want to play this ultra conservative and you really want to, take this position and kind of finesse it a little bit, you could put your level all the way below 1660 if you wanted to. It still just would be about a 13-cent risk. You're certainly going to have the ability for 20 cents to the top side or 30 cents to the top side. So you could still scalp this with some wide range. But since CCL generically only moves in 10 to 20 cent ranges, I think it's safe for us to keep this entry a little bit tighter. So what I'm going to use is one of my hotkeys here. Let me load into my test account, since we're obviously in replay mode. My live account won't work. And I'm just going to go ahead and I'll put a stop in here at 1666. Right? And then let's go ahead and get this thing going. And then as soon as we make the new high on our third candle, I'm going to go ahead and go long. So we made our new high there, so I'm going to go ahead and go here. I've got about 1,600 shares here. Now, what happens, normally because this is a fixed risk hotkey with an auto stop, I would have had an auto stop pop out here. But since this is in replay, the auto stops don't work, which is perfectly fine. So now we're going to sit back here and we're going to let this thing start working a little bit. So while it goes, I want to talk a little bit more about how these pivots are working. Give me 1 second here. So we're going to go up for... All right. So yeah. So now we're moving. So now that we're going up, and look, we've broken up here through 1680. So now we're out through the top of this this range area. We came down here and we're holding. So this is pretty good. At this point, I might even go ahead and move to break even on my position. Probably not, since I haven't gotten a partial yet, but I have a really tight stop, so there's no reason to get too anxious here. But normally after I get a significant breakaway, maybe up to like 1690, then I'll probably go ahead and would move to something like break even, because at a certain point, once it leaves this range, if it comes back in, it's probably going to fail. So my target in this instance is going to be $17. Now, I like $17 because we went all the way up to 1705 before. When I was trading this live on the level 2, there were a lot of asks congregating at $17, so it certainly looked like a good target. So let's go ahead and drop a good chunk of our shares. We'll drop a good portion of them there, and we'll drop them at $17. So I'm going to go ahead and put the order out there, and we're just going to sit there and wait. Now, we've got this pivot set, and as you can see, we've got this going. Now, I'm going to go ahead and accelerate us a little bit. Let's go up to 32 times speed so we can get this party up and going a little bit. So these pivots are going to be very, very important to watch, because as long as you're staying above these levels and the volume continues to stay down, there you go. See how we have our volume starting to come in now? Volume is building and pushing, so we're going to start to climb and push up towards 17. Right, and that's where I've got my first target at, is 17. You could do 1697 or 1698 because there's a large ask there. So it might be better to do 1696 or 7 or something like that, just to make sure you get a fill. But because of the large number of asks that were on there, and because there were a lot more orders above that, I felt pretty confident holding for 17. So I'm just going here, and again, we're just watching. All we want to make sure is that we've got plenty of volume as we push up, and we don't want too much volume. There we go, big spike in volume, right? Filled at 17. We're immediately up $173. So we had a $150 risk, so we're already washed there. Got a nice 2-to-1 and a little bit extra. And now we're going to set down. Now notice what's happened is we now have a new pivot set, right? 1705, which it's pressing against here, right, through high volume there, and it set a new pivot. So now we have this area all the way down here. We have a volume area here at 1690 and a volume area at 1705, which also matches with this high area, right? So those are the kinds of things that we're looking for to set these pivots. Now notice as we came down to the bottom, right, our volume waned off. We didn't have a big hard sell-off into it, even though we had a large amount going on there. So I still think we're looking good for upward movement. So if that's the case, I want to get out some more shares. So I'm going to go ahead and put some up at 17. Let's do 1710. Now, you'll see this happen a lot actually in your level 2. You'll notice out of nowhere, you'll suddenly see a large order appear at 1710. Now, I'm no large order, but they're doing the same thing I'm doing, which is they see the volume, they see things are pushing. Let's go ahead and put some orders out there to get filled. Boom. All right, now we're filled again. So we're going really, really good on this position. We've now got 2 partials. We're at break even. Basically, the stress is out of this position. We've moved into our new range, and 1690, if you notice, has now developed as a very critical support range. Now, at the top here, we moved up on high volume, but when we sold off, we stayed above 1690. So as long as we stay above 1690, I'm feeling very, very good about this position. So I'd like to get a little bit more off at 1720. So maybe let's take 250 more shares off at 1720. But look, we've actually failed off of 1720 or on the push off, and we had a little bit of volume there come in, but not a lot. So that's okay. I'm actually still feeling okay about this position, because although we pushed off and we're having a little trouble, our volume hasn't gone to resting. It hasn't died completely off, and we haven't had any major spikes. So now what I would like it to do is I actually think we might have a good position for an ad coming on here. So if that's the case, then we're going to need it to come back, and the 100 moving average, maybe a little bit underneath, like back around 1690, since we know that's a critical support area, might be a great place to add. Because remember, if you're using a free roll like I tend to use a lot, the one thing that you want to do is you want to let it come back enough so that when you average into your position, you don't leave yourself with such a poor risk versus reward ratio, that you're just, it's not worth the ad. If you do it too far away, then your risk is too tight, right? And you're just going to get stopped out. But if you can do it with a little bit more, distance to it, then that's good. All right, so here we go. We came back down to 1690 and we threw some volume down here, and I like that. So I'm going to go ahead and I'm actually going to go ahead and well, I didn't mean to pop that up. Let's see. I'm going to go ahead and buy back into my position a little bit more here. Now the good thing here is because we have this low level set here, right? I have a very obvious risk versus reward. So I added in my shares, and my new stop loss will be the break of 1690. So now that we did that, let's go ahead and remove these shares, and let's go with 500 shares now, since we were able to take that off back at 1720. And we'll put 500 shares up there now. Now, if it comes through 1690, right, and it stops me out, then that's not a problem, right? Because what I've done is I've averaged in, but I've averaged in leaving my break even just below 1690, like around 1685 or 1670 or something like that, right? So this puts you in this really comfortable position that although you're taking on a lot of extra risk, you're not actually taking on the risk of more loss. You're just taking the risk of losing some of your profit, which is why the free roll works so well. Now, you can see here we've came down. As we came to the bottom, we had a couple of indecisions on volume, but overall our average volume declined quite a bit. So I'm feeling very, very good about this position at this time. So I'm just going to hold out strong for it and let it go. So let's go up to 64 times so you guys can really just see how this thing matures and comes out. So notice here we are having some strong volume here in these mid areas, which is great. As we've pushed up into the top of this range, we're now accumulating and building, right? So, and now we're starting to break out. Let me slow it back down just a little bit now that we're getting closer to something going. So as you can see here, we're starting to push up and really start making some progress. And now at 1711, we're actually getting an ascending, more or less an ascending triangle. So we've got a couple of touches. Everything's pushing up here. Remember, if you look back here, 1711, we had high volume here before it failed off, so going through there should be good. Notice we broke through on good volume, had a low volume pullback. Let's see if this thing will hold and push up. So as you can see here, we're having that high volume push up towards 1720. There's the volume spike I was hoping for. So bam, big volume into 1720, got filled. Now I'm up $528 on this position, and I'm back down to 500 shares. My last partial for my all out, I'm going to want to do around 1730. At this point, the reason I'm choosing 1730, it's only another 10 cents away, and it's already 2:30 in the afternoon. CCL's average trading range is generically only around $1, maybe 80 cents or something like that. So expecting $3 or $2 moves out of CCL isn't really viable, and that's one thing you guys should consider as you're looking at putting these things together, is that really when you're looking at it, thinking when you're trading the stock, how far can this really go, and make sure you're sizing appropriately. Playing 50 shares on CCL or 100 shares on CCL often doesn't give you a lot of return, because you have a stock that generically only, even on its best days, only moves a couple of dollars. So it's going to be really hard to squeeze good profit out of it. But as you could see, with 1,600 shares and a good ad in reasonable management, we have this thing up to around $528. And if I take a stop out right now, that's mine to keep. I'm at break even, right? If this goes up to my target, then I should probably close the day out, around the better part of $800 for one trade. So we're going to have $150 worth of risk, as you saw me take with my hotkey, and that $150 worth of risk is going to equate to, around $800. And if you can maintain that kind of a ratio, then you could see, even if I took 3 or 4 stop outs today, this one trade would still have enough to win me out and put me up at least $100 or $200 on the day. So we're starting to throw a little bit of volume back on the trade here up to the top side, which is looking quite interesting. And you can tell it's definitely struggling a bit. We did do a nice little retest here on this lower level of 1711, and notice at the retest we didn't have any major volume, just mid-level volume, which is good. If this test came in here and we started breaking through this level and having like lots of volume coming in, that would be a lot more concerning. But with the way it looks now, I still think we're good for our push up to 1730. So notice on the 5-minute chart, this 1725 has become quite the level. We've had 1, 2, 3 tests to that top side, which is starting to make it look like an ascending pattern. So here we go, boom, 1730, all out at 1730. We have a previous daily level at 1734, so we'll probably get one more push up to 1734 or 35. And then that'll be all it. When I actually traded this, I was actually sitting back waiting for this volume spike, and I think I actually went all out a minute, like right around now, after the large volume spike happened, because I was hoping we could get a little bit more out of it. But in reality, seeing this previous daily level in here, 1730 is certainly the way to go. So I'll go ahead and pause this. So pivots themselves are not complicated, right? What you're identifying is the tops and bottom of ranges. When you're taking trades, you want to take your trades, if you're going long, you want to be as low on the range as possible with risking the loss of the range. Or if you're going short, you want to be as high on the range as possible, risking the claim of the range, right? What a lot of us do way too often, and it just gives our money away, is what we do is we trade into the top of a range hoping for a breakout, and what inevitably happens is you're trading at the top of a range, and if that range hasn't thrown volume, if it's not ready for that breakout, then you're gonna take stop outs because the bottom break of that range is just too far away for a reasonable risk versus reward. So to all of you, and as you're trading, my suggestion is wait for the stock, even if it's going without you. Rather than FOMOing, wait. At some point in time, that stock will come back, at least close enough for you to try and test it off the bottom of a range, and then that risk versus reward is a much, much better RVR spot to be in. Not only is it a tighter RVR, if you lose that range, you know you want to get out, so there's no need to hold, but also it's a much stronger RVR because you're going off of a support level that was proven as a resistance level. It broke on volume, you know, it hung up there and it stayed. And then as you can see, like on CCL back on the 1 minute, we had these overall tests coming back to the bottom of these ranges, top of a range here, bottom of a range here, here, and here. Let me highlight. So as you can see here, it was the top of a range here, multiple touches. We broke on volume, right? We tested on low volume, and then we moved off, and then we set a new pivot here with the volume. Came back down, bottom of our range was already set because it was the top of this range, right? No volume. We pushed back up, threw a little volume up here before coming back down. No major volume. 100 SMA retest plus the range is beautiful. And then it hugged the 100 SMA like that before finally breaking out. When it broke out, big volume, and then climactic volume, right? Climactic volume. So these are the kind of things you want to be looking for as you're trading. Patterns are great, and you should use patterns, but you should only use those patterns in conjunction to your VPA, right? You need to understand, is the stock accumulating? Is it distributing? And we'll go into that a lot more in a future episode. But are you transitioning to the next range? You can do an ABCD pattern, but if that ABCD pattern is coming into the top of a range and the volume isn't right, the ABCD pattern will push up a little bit, it then will turn over and fail, right? You need to be paying attention to where your ranges are, because when you see your ranges, then you'll know where to get in and out of positions. Use your level 2, see if there's large orders like at 17 in this instance, or 1720 or 1730. See if there's large orders accumulating, doing what I was just doing before on this partial right here. You saw me put out 1720 and it was put up above. Well, if everyone's thinking what I'm thinking, you're going to see a large grouping of orders up there in a very similar price level. And that level, if the demand is there, will be a supply location that the price will run for. You see Andrew trade into those large asks all the time, because what it shows is if the demand is there, there's plenty of inventory to absorb the demand, and that's a good spot to get a fill, especially if you have a large position like Andrew's. Well, I'm going to go ahead and call it on the VPA series for this. We were talking about pivots. I hope this was very informational to everybody. If you liked the video, please take a moment and throw me a like. Maybe subscribe to the channel and ring that bell so you can get notified with us in the pre-market level. We have Carlos and Norm doing the pre-market show, and what they do every pre-market is go through and find pivots and levels with good volume area for you guys to trade off of. That way, when you start your trading day, you've already got a lot of this mapped up. Carlos does this like a pro in seconds just by looking at a chart. This is a tool to be practiced and sharpened because it will pay dividends in your trading strategy. I hope everybody has a great weekend and a great holiday. I hope you all have enjoyed your past trading week, and I'm looking forward to seeing everybody next week around BBT. As always, have a great day and keep it green.